My name's Anne from Orchid Systems. We're based in Sydney, and we've been developing add-on modules for Sage 300 since 1993. We have over 5,000 sites worldwide, and on average, each site runs 2 Orchid modules. All our modules are developed in the SDK, and what that means for you is our modules have the same look and feel as the Sage 300 core modules, and they support all the standard Sage 300 utilities, for example, database dump and load, integrity checks, and it supports the reporting tools that Sage 300 core modules use. So for all intents and purposes, using an Orchid module, which should appear the same to you as you're using a Sage 300 core module. Over the years, Sage has OEM'd and gold certified some of our modules. We've got a very close working relationship with the Sage 300 development team in Richmond, Vancouver. So we think it tells in the quality of our modules. But specifically talking about the Australia and New Zealand region, we have 900 sites in Australia and New Zealand, and Microchannel are supporting 450 of those 900 sites. So they're definitely the largest business partner supporting our modules in the Australia and New Zealand region. And today I'm going to be talking about inter-entity transactions and inter-entity trade. These 2 modules can be run separately, as I will discuss, or they can be run in conjunction. And there are 70 clients in the Australia and New Zealand region using inter-entity transactions and inter-entity trade in the Microchannel client base. And here are some of the companies that are using either inter-entity transactions or inter-entity trade, or indeed both. Orchid have written quite a few modules over the years, 13 in fact, and they fall largely into these 5 categories: collaboration and intelligence, where we have Info Explorer, Notes, and Document Management Link; automation and productivity, where we have Process Scheduler and Report Runner; tailoring your system and integration, where we have Extender, Data Views, and Optional Tables. But today I'm going to be talking about streamlining financial processes, where we have an EFT module, and the 2 modules I'm going to discuss in detail are inter-entity trade and inter-entity transactions. And on the operations side, we also have return material authorizations and repair tracking and bin tracking. And on the left-hand side, you can see a screenshot. This is taken from version 2018. If any of you have upgraded to 2018 yet, you'll see that the new look and feel of version 2018. And you can see our modules sitting on the Sage 300 desktop as if they were a core module. So inter-entity transactions. The first module I'm going to discuss is inter-entity transactions. And this module allows you to automate the loan account entries between what we call entities, which could be a company or a division or a branch or even a project if you want to keep a project self-balancing. But the more traditional use of the module is to automate the loan account entries between companies. So if you find you're having to allocate expenses, either revenue or expenses across multiple companies, and having to do data entry or duplicate data entry in both companies, you can use inter-entity transactions to automate those loan account entries. A great time saver and productivity tool, as it cuts down on the time taken entering the transactions, but also at month end manually reconciling the accounts between companies, and to keep your companies, the loan accounts in balance between companies. So inter-entity transactions automates the expense, revenue, or cash, any transaction between companies by using the loan account entries or the configured loan account entries between the two accounts. It's the loan account entries are created automatically at the time when you are posting the batch in the general ledger. So it therefore covers all subledgers. It covers, accounts receivable, accounts payable, any bank entries, any stock entries, any sales, or purchases through purchase orders and sales orders, because it's only at the time where it hits the at the general ledger level that it recognizes that a transaction is going between two entities. And the way it recognizes that is by configuring a segment or a group of segments in the general ledger, which indicates your entity or your company, project, fund, whatever you're trying to keep self-balancing. Using inter-entity transactions, you can also run a consolidated age trial balance across multiple companies that have been configured in inter-entity transactions. So you can do a AP age trial balance and an AR age trial balance. So in inter-entity transactions, up the top right, you can see the first thing you do is you denote which segment is going to be your entity or your company. So in this case, we're using segment 4 as our entity. The screenshot in the middle shows that between each entity pair that has a trading relationship, you would specify the due to and due from loan account entries. In this case, we're showing the loan account entries between entity 2 and entity 3. And in this case, the loan account entries are not direct. It goes from 2 to 1 and then from 1 to 3. So you can have multi-level routes for loan accounts entries, or single level if it's just a direct trading relationship. And down the left-hand side, we're showing the general ledger transactions that get automatically allocated at the time you post in the GL. But rather than showing you via a screenshot like this, which is not so easy to see, what I'm going to do is go and demonstrate a couple of transactions so you can see how inter-entity transactions works at the detailed level. So flicking into my Sage 300 company. And by the way, I forgot to say up at the beginning that you're all in listen-only mode. If you do have any questions, if you can pop them in the question box, and from time to time I'll come back to the question box and answer those questions, more likely at the end of each of the sections of the products. But just feel free to ask questions at any time when the thought arises, and I'll come to it at the end of the product. So first thing I'm going to do is go ahead and enter a new invoice for inter-entity, and go ahead and post that and show you the transactions that get created in the general ledger. In this case, I'm going to distribute office supplies to entity 1, 2, and 3. So choosing my office supplies vendor, giving a description, and I've set up a distribution set for my vendor to make my data entry a little bit easier. So let's say I'm going to distribute $10,000. My distribution set is for all my entities. I've got 5 entities in this particular database, and I'd set up percentages of how I want to spread that. But just to keep my transaction a little bit simpler, I'm going to only distribute to entities 1, 2, and 3. So by choosing a general ledger account which belongs to the target entities, then this is how I tell inter-entity transactions that I want $4,000 to be posted as an expense to entity 1, $3,000 to be posted as an expense to entity 2, and $2,000 to entity 3. So just completing my my transactions here. And go ahead and add that transaction. And for simplicity, I don't have any tax involved in this particular invoice. So in my scenario, entity 1 is the company Orc Limited, entity 2 is the company Orc Inc. 2, and entity 3 is the company Orc Inc. 3. And these are physically separate company databases. So when I go ahead and save and post this transaction, nothing happens at the AP level. I could have set that batch to automatically post before going to GL, but I've deliberately said no, I'll leave it open in GL because I want to show you the transactions as they get posted. So here's the batch that came through from AP, my credit to the control account of 9,000, and then 4,000, 3,000, and 2,000 being distributed to entities 1, 2, and 3 respectively. So at this stage, inter-entity has not done anything. It only starts working at the time I post in this particular, post the batch in the general ledger. So I'm demonstrating here using an accounts payable entry, but wherever this entry had come from, whether it had been manually entered in the general ledger or if it had come from AR, OEPO, IC, any of the subledgers that you might be using, this processing will be the same. At the time of posting the transaction, inter-entity recognizes that with respect to entity, this is unbalanced because there's a net credit of 5,000 to entity 1 and a debit of 2,000 and 1,000 to entity 3. So making it unbalanced with respect to entity. So in recognizing that, as you post the batch, inter-entity transactions adds the loan account entries into the batch. So for audit purposes, you have the loan account entries as part of the source batch that's being posted, so you always know where they came from. So it's recognized that between entity 1 and 2, there's a $3,000 loan account entry that needs to be generated, a credit in 1's books and a debit in 2's books. And between entity 1 and 3, there's a $2,000 loan account entry that needs to be made. 2,000 in entity 1's books, a debit of 2,000 in entity 1's books, and a credit of 2,000 in entity 3's books. And also, because I had configured inter-entity transactions, these companies in inter-entity transactions to be physically separate companies, so it knows that Orc Limited is entity 1, and 2 and 3 is 2 different databases. It then automatically reverses any transactions that belong in target databases. So reversed out the office supplies for entity 2 and the loan account entry for entity 2, the loan account for entity 3, and these are both the office supplies for entity 2 and 3, and the loan account entries for entity 2 and 3. And what I can do is flick across into entity 2 and entity 3 and show you the database entry that has been created there. But you also have an audit trail in your source database. So if I go to my inter-entity transactions and I go to the inquiries and look at the inter-entity audit inquiry, I would see, and I can filter to find, my target company or date range or source posting journal, etc. But I know it's going to be the last 4 in this particular case. You can see it has said that in posting batch number 218, in posting batch number 237 in the source, so these 4 lines here, it's created batch number 218 in, this is Orc Inc. 2 for the 2 lines, and here we've got Orc Inc. 3 for the 2 lines. A status of exported means everything was successful and that transaction has successfully been created in my target database. If I had had some sort of issue, for example, the fiscal year and period might not be open in the target, or the general ledger account might not exist in the target, or the general ledger account might not support the currency in the target, you would end up with the message here, which account it is, or which fiscal year and period it is, and what the problem is. Once the problem's been corrected, you go to the periodic processing and reprocess these error entries, and it will attempt to send them through again. There might be another error, in which case you'd get another error message, or they would all just go through and the associated batch and lines would be created. So I could go through into the target databases now. I'm just going to flick across into entity 2, which is this blue company. And if I look at the batch list in the general ledger there, I can see this last batch that's come through is 218. You can configure, well, it brings across the posting sequence and the batch number and the entry number from the source, so you know where the transaction came from. And here's my debit to the office supplies and a credit to the loan account with Entity 1 in Entity 2's books. Now, I could have had this auto post if I wanted. My choice to leave it open so I could show you the transaction. Posting it in this database would create no further inter-entity transactions because with respect to Entity 2 is, the entity is self-balanced. And if I go across into my Entity 3, which is this orange company here, and look at the batch list here, as you would expect, I'm seeing the same, posting sequence, batch number, entry number, and giving me the debit to the expense account -3 of $2,000 and a credit to the loan account with Entity 1 in 3's books. So that's how, in principle, inter-entity transactions works when working at the general ledger automation at the general ledger account level. But as you noticed, when I created that initial transaction, the way I selected which entity I wanted the transaction to go to was by choosing an account 7900-1-2-3 for Entity 1, 2, and 3. So that is one way you can indicate to inter-entity transactions what the target entity is. And that's the clearest way and the easiest way for operators to work with, because you select the account belonging to the company that you want to send it to, and it sends it through. But it does mean that that account needs to exist in the source company. And if you had a lot of entities, let's say you had 50 entities in entity transactions, and you had 50 different expenses that you need to allocate between these different companies. So 50 times 50, quite a lot of extra accounts in the source company, which you may not want to have. If you only have a handful of accounts or a handful of entities, then it's fine, and it's better to go the way by choosing by account because it's more clear. But the other way you can configure inter-entity transactions to work is to work via optional fields. So for this particular account, or this range of accounts in my 6,000 range, I've said don't expect to find the account, I'm not posting to 6260-2, 6260-3. Instead of that, I'm going to use an optional field. So if I wanted this initial $3,000 to remain in Entity 1, I would use my configured optional field, which I've called subst entity for the substitution entity. I've said this is to go to, or remain in Orc Limited Entity 1. Whereas this particular row, I want to be sent to Orc Inc. 2 because I've chosen Entity 2 for the optional field. And this row, I've chosen Entity 3 for the optional field. So it's a little bit more awkward working with optional fields because you've got a second click to say where your destination is. But for large combinations of entities and or accounts, it is the probably clearer way or a preferred way to work rather than having all the accounts for all the target entities that you need in the source entity. But the processing is similar, not exactly the same. The same from the point of view when I post. Nothing happens at this stage. It's only when it goes through to the GL that we see anything happening. So if I go back to my general ledger account, the general ledger batch that would have been generated by this, and it should be the next batch, you can see we've got a credit to the control account of 9,000 and then a debit to the same expense account, but with different optional fields flowing through. So if I scroll across to my to the right-hand side here, and I should have brought it forward, make it a little bit easier, but we can see it's Entity 1 for the first row, Entity 2 for the second row, and Entity 3 for the third row. So in order to get that to happen, I attached the same optional field both to the general ledger transactions and also to my AP invoice detail. And that's what caused the two to flow through. And when I go ahead and post here, the same processing will happen. It will first it recognizes that these are substitution accounts. So it recognizes that this entry and this entry are substitutes for entity 2 and 3 because of the optional field. So it reverses the amount out of the original account and puts it into my clearing account for entity 2. Same thing for entity 3, it puts it in my clearing account for entity 3. And then it recognizes that we've got a debit or a credit to entity 1 and 2, and they're out of balance, so it raises those using the same accounts, the loan account entries between 2 and 1 and 3 and 1. And then again, we get the reversals. So any any accounts being posted to as -2 and -3 will be reversed out of the source batch. In the same way, I could go to my audit, IY audit to find these batches there, or just flick across into the GLs and pick them up there. And here we've got the posting sequence 71. So in this case, it brings it across from the first in the clearing account and then reverses it out of the clear account into the mapped or triggered expense account in the target. In my case, I'm triggering to the same account, which makes for easier setup. So it's going into 6260-2 and that's being debited, and the loan account with entity 1. So not to try and confuse you with all the setup that's required for inter-entity transactions, but if I just go back to my my source company, the main setup that you need is you need to first of all specify which is your segment in the chart of accounts, and you do need a segment. So on the segments tab, we've configured that it's entity 4 or segment 4, and in this case my default segment is entity 4. And the next most important setup is the transaction routes. So here you're defining between entity 1 and entity 3. This is the loan account in entities 1's books, so due from 3 in 1's books and due to 3 in 1's books. So in this case, we've separated the asset and the liability, but you could have used the same account if you don't mind just telling by the sign which way the debt is going. And then we say the second entity in this particular pair is entity 3, and here's due from 1 in 3's books and due to 3 in 1's books. And you need to specify your loan accounts between all the valid trading pairs. So between 1 and 3, 1 and 5, 2 and 1, and so on. Just to show you a multi-level one is, for example, between entity 1 and 4. So if I did a debit to entity 4 and a credit to entity 1, or vice versa, it would use this particular route. And here it's saying we've got no direct loan account between entity 1 and 4, so it must go from 4 to 2. So we've got configured through to 2, and then from 2 going to 1. So this is a 2-level route, which would cause a GL batch first to be created in entity 2, and then down into entity 4 or up into entity 1, depending which way we see this, depending which of the entities the transaction was recorded in. If in entity 1, it would have gone from 1 to 2, and then from 2 to 4. So that's the main setup that you need for inter-entity transactions. But if you're using the multi-database versions, and I will come to all the different versions of inter-entity at a later stage, there is also a mechanism where you can set up clearing bank accounts for other entities. When you do this, if I set up this clearing bank account E2CCB, what that means for entity 2 for the CCCB bank account, what that means is in company 1, I can do a transfer to or from my bank account to E2CCB. And when that bank transfer is posted, inter-entity transactions will automatically raise a bank entry to clear out that clearing bank account, and log into company 2 or entity 2 and do the bank entry in that database. So for bank entries, we do them as bank entries, not as GL movements, because you want to have those bank entries in the associated bank recs for those bank accounts. So the transfer, where you would normally have to do a transfer out or a payment from bank account 1 and then log into company 2, bank account 2, and do the deposit, you can do it in one step using inter-entity transactions cash management. You can also do payments and receipts using these clearing bank accounts. So if I did a payment using the E2CCC bank account, what I do a payment in Orc Limited, I apply it to invoices in Orc Limited, but the real withdrawal will come out of entity 2's bank account. So via a bank entry, it will do the withdrawal in entity 2. So you can pay invoices in company 1 and use a bank account of a configured second company. And the entry into those two bank accounts would be via the loan account. So in effect, you'd be showing the payments applied via the loan account in the source company, and then in the target company, you would see the withdrawal to the loan account back with entity 1. So that's AP payments, but you can also do AR receipts. So I could apply an AR receipt to invoices in company 1 and have the deposit happen in company 2. And the final thing you can do with cash management is the ability to use, for example, if you had a management company that did all the payments to your vendors, and you've entered your accounts payable invoices in all your subledger, in all your separate companies, because you want to keep track of the GST in the separate companies. So your telephone bill, for example, from Telstra, you would have entered $100 into entity 1, $100 into entity 2, $100 into entity 3. So you've got the GST on that being tracked in the separate companies. But if you wanted to pay that in one payment, $300 in total, what you can do is use a configured cash management bank for two-step processing instead of one-step processing that I have here. And what that allows you to do is to apply a payment to invoices in company 1, and it would transfer the invoices to company 2 via the loan account for payment from company 2. So in that way, you could, in entity 1, 2, and 3, pay your Telstra account using your clearing bank account, or using the loan account with entity 4, let's say, if they're going to make the payment. Then all the invoices would be posted through either using the same vendor code or a map vendor code if you want, to company 4, and then the invoices can be paid combined payment there. So it gives you consolidated vendor tracking and payment processing. And those are really the main features for inter-entity transactions, the automation of loan accounts between entities. So just going to flick back to my PowerPoint. And talk a little bit about inter-entity trade, and I'll spend most of the time then doing some transactions in inter-entity trade, showing you how that works. So often when you have groups of companies, not only are they buying and selling, paying services or receiving money on behalf of each other, which is really what inter-entity transactions does, but you might also have the companies providing services, either goods or services, between each other. For example, I might sell items ABC to my customers, but I purchase those items ABC from my sister company, who's the manufacturing company who makes those particular transactions, those particular items. So inter-entity trade allows you to record the transaction in one company and have the second transaction either in the same company if you're using multiple companies in one database, or physically across a second company. So in my case, I could enter a purchase order in my company to say I want to order ABC from my sister manufacturing company, and that would automatically create the sales order in Orking2, which is my manufacturing company. And then when Orking2 ships that, it can come back automatically. By configuration, you decide, it could come back automatically and receive my purchase order. And when I invoice in Orking2, it would come back automatically and do the purchase invoice in Ork Limited, if that's what I want. Or you could just stop at the order level, or just stop at the stock movement level, or you can do all three. You know, it's the purchase order, the shipment receipt, and the 2 invoices. So inter-entity trade saves you from having to do the reciprocal duplicate entry in a second database or against a second customer / vendor. So you can do this either at an accounts receivable to accounts payable level. So if it's just services that you're doing, you could do an AR invoice in company 1, which would automatically create the AP invoice in company 2. Or vice versa, do the AP invoice and have it automatically create the AR invoice. Or you could be working through OE and PO, where stock is being sold between the companies. So here again, I'm just going to talk quickly to these screens, and then I'll show you in more detail. So this particular screen down the bottom right, it's showing me an AP-AR trade setup relationship, where we're saying any invoices created against my AP vendor 9992 in my Ork Limited company is going to automate an AR invoice in Orking2 for 9991. So this is AP-AR trade. And when you're doing AP-AR trade, you would say, do you want just invoices, or do you want invoices and credit notes to be duplicated, or duplicated, you know, flipped over, inverted into the other database? And you can also do payments. So when I pay the AP invoice, it'll go across into AR on the other side and automatically create the receipt applied to the invoices, the AR invoices that were created by the AP invoices to which the payment is applied. And that is the bank account CCB in my target database that it would be creating it. And when you're doing AP-AR trade, you would normally you wouldn't be using the same accounts. So normally you'd be mapping your accounts. So what this is saying is any AP invoice with these accounts 6000-1 or 4210-1 in my source company, when you go into the target company and you're creating the AR documents, you're using either a distribution set or a distribution account. In this case, I'm using a distribution account of 4230 and 4210-2 respectively. On the OEPO side, it would look more or less the same as that, but you can optionally decide whether you want to map your items or not. If you don't map items, then it assumes the same item exists in both databases, or you could have a mapped item list. So, you know, item A in company 1 is item B in company 2. And just like inter-entity transactions, inter-entity trade audits all the documents that it creates from the source to the target. So up the top left, I've got an example of the OEPO audit inquiry showing me the first lines, showing me that for the source document number order, and I can't quite see the end number there, but it gets created a purchase order PO30 in Orking2. So rather than just talking to screens, let me go across and go into the software. So again, I'm going to start off in Ork Limited, my main company. And the first transaction I'm going to do is an AR trade type, an AR trade transaction. So I'm going to do an AR invoice in my source company, and it's going to create an AP invoice in my target company. So this time I'll show you the setup that drives this, and what you need to do in all the companies which are going to be source of transactions to be sent to other companies. In this case, I'm going to be looking at this one, AP to AR. So what I'm configuring here is any documents posted against my vendor 9992. It's going to be duplicated, reciprocal document created in ORCINC 2 against customer 9991. So that is entity 1 in entity 2's books. So when I do a mapping like this, it is possible, if you're trying to add a management fee in some circumstances that is applicable, you can multiply the source transaction amounts by a multiplier or a fraction to create a document which is higher or lower in the target database. In my case, I'm creating an AR receipt, an AR invoice where I want to, for rent, so I'm expecting an AR rent invoice to be created for me in, an AR rent invoice is going to be created for me in ORCINC 2. So I'm mapping these particular accounts. So these are the accounts that I'm using. Sorry, this is not my rent example, it's delivery and distribution. So I'm going to do an AP invoice to pay entity 2 delivery fees, deliveries they did on my behalf, and these are the accounts that it's going to map to in my target database. When you're doing AP/AR trade, you can specify an elimination company and elimination accounts to use if you want to automatically do a GL journal in the elimination company to eliminate any profit on intercompany sales like this. So from AP/AR trade, you can maintain an elimination company at the same time if you need to. So based on this, let's go ahead and we'll do an AR invoice for customer 9992. So just creating a new AR invoice batch. My customer, and I'm going to do a summary type invoice. And I'm going to use, I'm going to be entering a single amount for, sorry, I've forgotten the, oh, that's right. My distribution code. Was that one of my mapped accounts? Yes, I think it was. So rental income in my source company and $1,000 posted on that. So when I go ahead and post this particular batch, inter-entity trade works at the level of the source transaction posting. So at this point, it has created the AP invoice for me. So what I would do is either I can flick into company 2 to see that, or I can go into or before going into company 2 to check that, I could go to my inter-entity trade, AP/AR trade audit inquiry. I'm just going to close down some of these screens, otherwise I get too many open. So if I go to my inter-entity audit, so just like we had the audit for our IY transactions, we've got an audit for AP/AR. And this was an AR document going through to AP in ORCINC 2. And I think it will be this particular transaction here. I should have taken note of my batch number. And the source batch number, no, it must be 74, must be this one, 74. And it has created batch number 30 in the target database, and the status exported. Again, like inter-entity transactions, there could have been an issue with the period not being open, with the account not being mapped. Any of these errors that could happen, you would see the error, the word error here, you'd see what the source of the error was. You'd go back to the periodic processing for AR trade and reprocess that transaction. But if I just go across to company 2 and go to my AP transactions, and again, these could be auto-posted or manually posted, depending on how you want to see that. And in this particular case, because on my AP side, I said to distribute based on a distribution set, that $1,000 has been distributed to the rent for the offices and the rent for the warehouse, according to the percentage that I'd set up on my AP distribution set for rent. So you can go from one account to many in the target database if you're using AP distribution sets to distribute that amount. So that could be, that's AP or AR. I've demonstrated from AR to AP. But going back to my source company, and I'll just look at a setup for purchase for OEPO trade. So in our inter-entity transactions, just like for AR AP, we map vendors to customers. In OEPO, we also map vendors to customers, but we just have a few more decisions that we can make for the target documents that are being created and how they get created from. So if I look at this simple setup here, purchase orders to OE orders. So here, what we're saying is any PO document that's created against my vendor 9002 is going to go into ORCing 2 as a sales document, the corresponding opposite sales document against my customer 9001. When you're creating OE documents, you can choose to overwrite the category as I have, so that these sales in company 2 will be showing under the category of intercompany sales. You can also choose to override the location. If you don't fill in a mapping, it's going to be one-to-one. So if I do my sales order or my purchase order for location 1, it's going to create the sales order for location 1. Or I could override here and say it should be location 4 in my target database. And when I'm creating my my target document, I can say create it using the OE normal defaults for pricing, etc., using this price list code, or I can override my target document based on my source document. So in my case, the PO price that I have is going to be transferred onto the sales order as the price of my sales order. So I've chosen to drive it from the pricing as opposed to from the default OE price list type setup that you can normally do. And then in company 2, I've created a similar relationship, but in this time going from 9001 coming back to Orc Limited 9002, which means they're both bidirectional. So once I do the PO in company 1, which I'm now going to go and do, so if I go into my purchase orders, no, not my order entry, into my purchase orders, and create a PO for 9002. And let's say I'm going to order from location 1, 10 of this. Also from location 1, 50 of this. When I go ahead and post this particular transaction, because this vendor is configured to Orc Inc. 2 for that particular customer, as it's saving my sales order 77, it's created purchase order 37. So I could go through the audit trail, but I can also, just go through and have a look at purchase order 37 here. and it should be 10 and 50. Not quite sure on what's my configuration. Maybe I'll just go back to the audit trail to have a look. Not quite sure. Ordinarily, it would have created that purchase order, and then I could either, if I wanted to, I could either receive in company 1, which would cause company 2 to ship, and invoice in company 1, which would cause company 2 to invoice, or I could go into company 2 and ship an invoice and have those receipts automatically done if you want to. Or if the goods are indeed traveling a distance between the companies, you might want to do the shipment and the receipt manually because what gets shipped might not be received. So depending on your scenario, you can automate those particular steps.